off with that local currency. As I mentioned on Friday, 720, 726, and now we're sitting at 709. You've said this before, that you are, of course, pro a much stronger local currency because the fundamental factors still seem to be pushing us in that direction. Where do we stand right now?
Well, obviously the market was waiting for Wyoming, the announcement out of Jackson Hole on Friday. That was the big driver of the market sentiment prior to that. Bernanke's made an announcement, but not real, earth-shattering kind of news that we can really work with. And I think that's where the market's uncertain, just by virtue of the fact that it really does seem as though the Federal Reserve, they say that they've got arsenal left, and they say that there are ways for them to combat this growth crisis that they're finding in the United States. But what does that really mean? And we're going to come up to FOMC now in September. They're going to extend that meeting by 2 days so that they can discuss the scenario going forward. And I think that's going to keep and linger that uncertainty. But overall, sentiment towards the US has petered off. You've seen emerging markets rally. You're seeing equity markets rally. You're seeing a little bit of risk back on book, and your gold has come back slightly. So for now, I think that's the sentiment really. We're seeing, thin trading today because there's a UK holiday, as well as the fact that New York's under potential Hurricane Irene. So not great in terms of the likely depth within the market. But in South Africa, we've got a week that presents a lot of data. We're hoping to get some direction. GDP is the big number that we're going to be watching with regards to the growth in South Africa and the knock-on effect that we've seen from Europe.
We've actually heard some interesting comments coming through as well from Finance Minister Pravin Gordhan. What do you make of the fiscal consolidation path that he's just basically reiterating to the market, and again citing the Eurozone as a big danger to global growth?
Well, I think that that's the concern. I mean, the global growth backdrop has certainly impacted South Africa, and it's impacted emerging markets. Whether or not you think that austerity or curbing government spending is the way to deal with this crisis is something that we can debate outside of this. But the reality is that the real driver is the consumer that is unbelievably debt-laden. Consumers are saving their money and not spending it, even though we're at all-time interest rate lows. So you're seeing in South Africa private sector credit extensions possibly slowly coming back because the consumer's not comfortable to really invest, and you'll see that in small business as well in the environment that we find ourselves. So, for now we've got to get the consumer back, we've got to get unemployment sorted out, we have to see housing turn around. Those type of dynamics really do pose significant risks, and you've got a contagion issue coming out of the Eurozone in an environment where austerity is still playing a big picture, and that's continually putting the noose around the consumer's neck.
What kind of risk lie ahead? What kind of risk lies ahead for the likes of the local currency, though, Brigid? I mean, you mentioned the GDP numbers for the second quarter. We're expecting around 2.5% quarter-on-quarter, seasonally adjusted number. We know that growth for South Africa for 2011 is downwardly revised. Of course, the IMF still believes that we could see 4% growth. So pretty much divided on that front, it seems.
Look, obviously the GDP is the big driver this week. Some of the houses even being very pessimistic in terms of what we're expecting, what the numbers are calling for. They, the second quarter the latest GDP data that has been released is expected to be well downwardly revised. But that being said, year on year, it's probably going to be slightly off the levels that we saw last year. So, from an overall perspective, we're seeing the growth momentum slow down. On a bigger picture, though, if you're talking about investment from offshore, the driver really still is for yield and yield carry. So the bond market, you can see bonds have been well supported in the short end. Our curve is relatively steep, offering some value in the duration, which we're thinking that we may just see the curve flatten a little bit as we see continued demand and offshore demand into duration bonds, because they offer that carry that is still evident and is going to persist whilst interest rates remain low across the globe.
Well, Brigid, we also have PMI week. Of course, it's quite evident that everyone's going to be focusing on the manufacturing sector globally, and in South Africa the previous number 44.2, so it was quite dire. We're hoping to see a number of around 45. Perhaps if we're lucky we could reach that key 50 level. Tell us about the week ahead with regards to data flow and currency movements this week, and how you would be playing the rand.
Well, I think Rand's going to remain to the. I would be of the opinion that we're going to see Rand slightly stronger, purely because we're likely to see some further inflows that we didn't see prior to with the Wyoming announcement last week. So, and in terms of a bias, you can look for 7 and if not 690 on the Rand. I think we're going to see further strengthening on the bonds, specifically in the curve as you trade the 186-157. I think that the interesting thing will be PMI data. Unfortunately, a lot of that fallout might actually be around the petrol price the petrol strikes that we saw earlier in the month, which is going to bode negatively for that number. We've got trade numbers, we've got budget deficit numbers, and we've got the private sector credit extension, as well as the big one tomorrow being GDP. So certainly a week where we are likely to get a good picture of how South Africa is doing it as an economy, and obviously see what the appetite for foreign investment into our bond market is now that there's a little bit more clarity in terms of what the outlook is for the United States.
Let's touch on Europe also. We also heard that Finland is actually talking about Luxembourg controlling Greek assets as the bailout package starts filtering through in Greece. We know that this could actually cause another problem, because if there is resistance from Greece, then surely there'll be resistance from other peripheral Eurozone nations, because we know that if Greece is painted with a certain brush, then all the other countries that receive bailouts will be painted with a similar brush. What kind of risks lie ahead when it comes to the Eurozone crisis?
Well, the words that have been used specifically around this have been collateral. They want to see some form of collateral in terms of the fact that they will back the Greek debt. So I think from this perspective, you're worried about a sovereign that potentially could default. And I think in any scenario, when you get to this kind of direness of a situation, you can expect for some form of managing the downside of that risk. And one of the ways of doing that is to manage it around collateral. So there has been a lot of talk about that, whether or not Greece will come to the party. But then, in this kind of environment, beggars and choosers, eh?
Very true. Let's touch on the Swiss franc, posting very deep losses coming through across the board, and we know that the Swiss franc is actually viewed as a safe haven asset. It seems that the Swiss are trying to avert the strength in their local currency. There's a lot of speculation that banks could be slapped with a fee on excess franc balances. So these kind of movements and intervention we're seeing coming through, we're even seeing it on the short selling ban that has come through for many nations in Europe. Are we going to just see more coordinated moves on the currency front on a global level to try and avert the strength in a lot of the safe haven plays, so to speak?
Well, I think that, you've seen that strength purely being driven by a sentiment that has been very, very risk averse. So you saw in the yen, they came in and they intervened without really major outcome at all. In fact, the yen's trading at the levels that they were prior to the intervention. The Swiss, what they've done is they've basically charged, or they are putting a penalty on deposits into their environment, because they're trying to dissuade people from using them as a safe haven. That being said, though, as much as, they can margin gold, they can put penalties in place, yes, there will be some sell-off. But, ultimately the market will dictate, and you're going to continue to see the flows into, and it just gives you an indication of whether we risk on or risk off. And this really indicates a slightly more risk-friendly environment. So that's why you're seeing the rand strengthen, you're seeing emerging markets do slightly better, and you're seeing the likes of the Swiss franc sell off slightly. I think that it's, at the end of the day, even though there's a penalty involved in putting your money on deposits, ultimately, if it's a safe haven, it's worth the penalty, as you've seen with regards to how people view US treasuries, etc., even in an environment where they potentially have been downgraded. So it's really about the sentiment. For now, it's a little bit more risk-friendly, and we can expect to see the local currency do relatively well as our bond market.